Let's understand how to correctly set up retirement funds, referred to as benefit funds, in Sage Business Cloud Payroll. This is done in a two-step process. First, you'll set up the benefit funds in the company setup section. Once that is done, you link a benefit to the employee's payslip. And I'm logging into the Sage Payroll account from a separate web page. It's a good idea to set up any benefit funds your organization manages before adding your first employee. Before you begin setting up benefit schemes, ensure you have the correct fund details. Know which type of earnings contribute towards the benefit fund and understand the percentage of earnings that will be calculated for contributions, as specified by the fund's rules, well ahead of your first processing month. This thorough preparation guarantees that once processing begins, all calculations will be accurate. If there are any mistakes in the initial setup and you've already processed payroll transactions to any benefit scheme, you'll face the cumbersome task of rolling back to your first processing month to make corrections. This highlights just how crucial a correct initial setup is to avoid complex issues later on. Let's get it right from the start to ensure a smooth payroll process. So, what are benefit funds in South Africa? These funds help employees save for retirement and provide coverage against risks such as disability, as well as support for the employees' families in case of the member's death. Employers typically deduct contributions for these funds from employees' salaries and often make matching contributions as well. These funds are regulated by the South African government to ensure proper management and protection. When you click on Setup Benefit Funds under the Company Setup in Step 1, you will reach the Manage Benefit Fund screen. Here you can set up two types of benefit funds: pension funds and provident funds. Now you might wonder what the difference between these two funds is. Let's break it down. Pension funds. When you retire, you can take up to 1/3 of your total savings in the fund as a lump sum. The rest is paid out as a monthly income or annuity. This setup helps ensure you have a steady income throughout your retirement. Provident funds, on the other hand, were initially designed to give you all your savings as a lump sum when you retire. This gives you more flexibility with your money, but doesn't guarantee a monthly income later on. However, recent changes in the law are making provident funds more like pension funds. In the future, if you're part of a provident fund, you'll also need to use 2/3 of your retirement fund to buy an annuity, providing you with a monthly income, just like with a pension fund. You might have noticed that retirement annuity funds, or RAFs, aren't included in the list we've discussed. That's because RAFs are personal retirement saving plans. They're set up and contributed to by individuals, not by employers. While employers can choose to contribute to RAFs on behalf of their employees, it's not mandatory, and the individual still maintains control over the fund. Later in this video, I'll explain how to set up these contributions as a tax-saving benefit that reduces the monthly pay-as-you-earn dues for your employees. Let's add a pension fund for this demonstration. First, you'll need the fund name. and very importantly, the clearance number provided by the fund. Please note, you must obtain a valid clearance number. Without it, the setup will not work and you'll encounter validation errors from SARS if the number is incorrect. Next, describe the fund and decide whether the contribution will be based on a percentage or fixed amount. Since I've chosen a percentage calculation, I need to specify what the calculation should be based on. For this demo, I'm selecting percentage of specific earnings, and it will be based on 100% of the basic actual salary or fixed amount. Often, other variable incomes like overtime or allowances are excluded from the pensionable earnings. Your fund's rules will clearly indicate whether it's a defined contribution, defined benefit, or hybrid fund. For this demo, I'm selecting defined contribution fund as the type. I'll set the employee contribution at 7.5% and match this with the company contribution also at 7.5%. During the payroll run, you'll see exactly how these contributions reflect on the payroll and the employee's payslip. Finally, I'll save these settings. Let's add a Provident Fund, which many of you may encounter in your payroll setups. Start by entering the fund's name and its description. Since the percentage calculation is already selected, I will specify that it's based on 100% of basic earnings and fixed salary. Press OK. The contribution type for this fund is a defined contribution. We'll set the employee contribution at 9% of basic salary, with the employer matching this also at 9%. I realized I omitted the fund clearance number, which is crucial for setting up your company benefit fund.
Now I realize this numbers game can tie your tongue. I remember others who have had trouble.
Let me quickly add that number. Now I'm ready to save, but the system prompts me to select either basic salary or fixed salary. I'll correct that by removing the fixed salary. It's important to choose one salary type, either basic or fixed, as the system doesn't allow for both. Click OK and save again. And there you have it, an example of how to set up a benefit fund. The biggest takeaway from this section is the importance of adding your benefit funds before you add your employees in the setup process. Ensure you have all the necessary correspondence with the fund on hand, including details like the fund's name and clearance number. Also be clear about the type of fund, whether it's a defined contribution or another type, and other aspects like the base amount for contribution calculations and the percentage contributions from both employer and employee. Now that we've added the benefit funds, the next step is to link these funds to specific employees for their payslip runs. This is a one-time process. Once linked, the benefits will automatically be included in each payroll run going forward. The rest of the payroll setup takes place on the employee payroll screen. As part of this, during our setup of benefit funds, we touched on private retirement annuity funds, which are managed by the employees themselves. However, we can configure the payroll so that the employees receive tax benefits on their contributions. As the employer, you need to know three key things. First, the amount the employee contributes to the fund each month, the start date of these contributions, and thirdly, the fund's clearance number. After entering these details, click Save to preserve these settings. Now let's set up a pension fund for this employee. Start by expanding the list of deductions and locate Pension Employee Contribution. Remember when we added the pension fund earlier? The Alex Jones Endurance Fund now appears on our list for selection. As soon as you select it, the details of the contributions for both the employee and the employer are displayed, including the base earnings and the percentage of those earnings that will be contributed. Then, choose the date from when the pension fund contributions will start and press OK to save the settings. You will notice that the pension fund has an effect on the employee's tax because pension fund contributions are an allowable deduction from tax. Many hourly paid employees have Provident Funds set up for them. So let's go through how to add this to the payroll setup. Click on the plus sign to open up more payslip specific deductions. Select Provident Fund from the list of deductions. Choose the fund that the employee belongs to, which we set up earlier, and select the date from when the fund becomes applicable to the employee. Details of the fund, including employee and employer contributions, the portion of earnings it is based on, and the percentage contribution are displayed. These details were previously established when we added the fund in the benefit fund setup. Once you press OK, the Provident Fund contributions will be calculated during each payroll run for this employee until the arrangement is terminated. I believe this covers enough examples of deduction setups that you are likely to encounter. Now, let's explore the retirement funding reports by printing a year-to-date detailed report per employee for all three types of retirement plans. You can switch between the retirement plans, but for the demo, let's leave all three selected for all the employees in the payroll and press Preview to display the pension and Provident Fund details. If you found this video helpful and are ready to experience the benefits of seamless payroll management, I encourage you to try Sage Business Cloud Payroll. To get started, visit the Fund Accountant's website, navigate to Sage Business Cloud Payroll, and click on the 30-day free trial. This link will direct you to the sign-up page, where you can fill in the standard details required. However, if you prefer a more direct route, I will provide a link in the description of this video that will take you directly to the exact same Sage Payroll sign-up page. Thank you for watching. As you continue on your payroll journey, check out my other videos that you might find useful. For example, I have a video that's perfect for beginners to learn how to run a payroll, and another comprehensive guide on completing your annual tax reconciliations. These videos should appear on your screen right now. There is so much more information to share about payroll. Subscribe to the Fund Accountants channel to be informed as soon as I release those videos and more valuable payroll insights. Until next time, see you soon.